Hey guys, welcome back to the Passive Money Podcast. If you haven't seen us before, our names are Kirby and Alex. And today we're going to be talking about the work that you've got to put up front when you begin investing and before it becomes passive income.
And I believe this is a good topic because I hear it all the time. And I say it also, you got to put the work in, you got to put the work in, you got to put the work in. For novice investors, new investors, or people that's kind of investing, they always, people always say put the work in, but then they wonder what work is actually needed to be put in. And that's the question that everybody has. I mean, people be like, all right, I want to do more work, but I don't know what to do. So when we talk about putting in work, I look at it as if you don't know what to do, absorb all the information possible that you possibly can. If you look on your phone and then you swipe, if you have an iPhone especially, and you swipe to the left, and then when you swipe to the left, I got to pull up my phone because I ain't did it in a while. And then you swipe to the left, and then you scroll down to activities, letting you know what you did in the past 24, 48 hours. And on your iPhone, it's telling you spent 6 hours on social media, another 8 hours on entertainment. And then, but you're talking about you want to learn how to invest. That's where you spend more of your time. Where you spend most of your time is what you're actually looking for. If you spend most of your time on social media, then social media is the one that's hampering you from going to the next level or trying to get started in the business of investing, owning businesses, or producing passive income. So you got to prioritize your life on what's important. It can't be just, hey, I watched a 30-second or 30-minute video on YouTube and just think that you have it all figured out.
Right.
It's actually running the numbers, looking at different things, and going through the different aspects of actually what to do as an investor, of actually looking for an investment and getting a good return on investment for you and your household.
Right. Like, and I mean, and I see this all the time with you, especially. Like, I know, I always say I'm still working on building up all my assets and stuff. But I mean, sometimes I think about, just the class that you have, the video that you put out every morning for that, on top of, looking at the charts and looking at the market, and then being there for market open while at the same time managing your properties and then YouTube. And like, you have to be willing to literally do almost everything at once and handle all that. I would say I'm not, at that level yet where I'm managing all these different things, but there's definitely the part of stocks and then the YouTube part. And then, if you're working at a day job and then, those different things. But the more you gain, the more you get, you have to sacrifice more and more of that leisure stuff to make room for work to actually, and I say work in the way of the work that you put up front to for what you're building for your future.
And you always hear people, I mean, I get it all the time. People like, oh man, you do all that. But then the same people that say you have to do all that is the same people that, I'm not gonna say envious or wondering like, oh, well, I don't have nothing. Oh man, you got it all. It's because of the work. Everybody only see the rewards that people receive, but they don't see the work that people put in. Every millionaire, billionaire, anybody that, reached that 7-figure mark or higher, the only thing everybody's looking at is that number next to their name, how much they're worth, how
Right.
much they made. But nobody actually looks at what did they put in to get there. Even lottery winners put in work, unless they got lucky the first time they played. They are due diligence to go to the lottery machine every day, put $5, $10, $15, $20 per day, and then hopefully one day in their life they hit it. But they're putting in the work to do it. You can't win the lottery unless you play it. So that is the sacrifice they're doing. They're taking money out of their mouth for food, water, high gas prices, whatever, to keep playing the lottery. There is a sacrifice being made. Nobody wants to make that sacrifice, but everybody wants to reward. If you look at athletes like LeBron James and things like that, he just reached the billionaire mark. But LeBron James is up maybe 20 hours a day, maybe 18 hours a day, getting 6 hours of sleep, working on production companies, working on advertisement, working on investments, working on his actual career, the NBA. But nobody sees that. And he's working all the time. The only thing they see is that number next to him, a billionaire. Oh, I wish I could do that. If you want to get to that number, then you need to be doing the work every day that he, she, or whoever is doing to get there. That
And
is the key of getting to that number.
I think one of the hardest things for people to shift out of is the mindset of the work you have to put up front in your path of becoming an entrepreneur. You are not going to get compensated for that for weeks, for months, for maybe years up until it's actually built. And, and I can see that easily with a lot of people that, and I've seen this on, from my experience where people will say, oh, that's too much work. It's too much work to do all that, too much work to manage a business, too much work to manage real estate or whatever. But it's not too much work for them to put in overtime, work 12, 14, 16 hours a day for somebody else.
Right.
But the only difference for them is that they're getting compensated right there and then. But your time only goes so far with compensation if you're working for someone else. But your time, if you put the work in for yourself to build something later on in the future, your income is the sky is the limit as to what your income is going to be.
Absolutely. And yeah, and for people wondering when we say putting in work, it's the research that's involved to get what you want. I mean, no matter if it's a stock, no matter if it's real estate, no matter if it's business, it's the research that's done on those different sectors that makes you successful. Anybody can go out there and buy a house. You can buy a house, but if the house don't cash flow, or if you buy a rental property and the rents don't cover the mortgage and the taxes and insurance and the maintenance costs and the vacancy costs, and you having to keep digging into your pocket to pay mortgage or keep this house afloat, then you're losing. And a lot of people buy negative cash flow properties and pay money out of their pocket because why? They don't do the research. If the deal is not good from day one, you don't do the deal. And people just think that, oh, it's easy as buying a house and renting it out. No, if you're buying a house for whatever number, let's say your mortgage payments is $1,000. If if you rent it out for $1,000, then that means there's zero cash flow. So, and then some people have the mindset of, oh, well, they're paying down my mortgage, so that's fine. No, it's not fine because a couple things you're forgetting. Stuff is going to break in that house. Where will you have the money to repair it? You got to take the money from your day job working to pay for repairs. And hot water tanks, if you're paying for somebody else to do it, cost between $1,200 and $1,500 now. If the roof collapses, you got to replace another roof. That's $20,000. AC units cost $5,000. So if you're not getting additional cash flow from a property, you shouldn't be nowhere near it. Even at the high interest rate environment we're in now, you should not be buying properties that are not cash flowing. Now, if you have a plethora of other properties and all of them are cash flow positive, you have a plan that you're going to buy a break even property, and you have a plan to work it a couple years from now to be cash flow positive, then okay. But most people just starting out with one rental property, they should always make sure it's cash flow positive. And if it's not cash flow positive, they should not do the deal whatsoever. But that goes into doing research and knowing what cash flow positive is. You have systems like Google, YouTube, and all that to look up what cash flow positive means. I know people literally still to this day that think the internet is just Facebook and YouTube. They don't know how much information is on
Right.
this interweb here that I'm looking at, and it tells you all the information you need, but to be successful. But people only use it for their entertainment, so they can be entertained, so they can forget about the reality that they're in. They don't use it for the information tool that it is to better the condition that they're in.
Right. And I mean, I know I don't have much experience with the real estate game, but I mean, just on if you're looking at a property as an asset, right? Like those that I've seen it as well, like you were saying, like people that buy rental properties and they think that they're investing in it, but there's no cash flow coming from it. I mean, the same thing would go with stocks. You wouldn't buy a stock that doesn't produce anything. And if you're buying a property that produces no cash flow, then what's the difference between that and the house that you might live in? They're both liabilities at that point. So it's like, I mean, if you're going to invest, expect or look to gain a cash flow from that investment.
And and it's all about cash flow. And just like you brought up with stocks, I see people buy stocks just because they heard it on social media. They heard it on somebody's YouTube channel. Say, oh, they said buy it, buy it. The information is right there in front of you to look at. I mean, I'm looking right now at Apple on Yahoo Finance. Easy, simple, free website to go to. You can go on Yahoo Finance, look up any stock. You can see what the company does. You can see the market cap of the company, the PE ratio. You can look at the financial statements from of the company. All the information is there, but most people don't even know about what the company does whatsoever. And I remember one time in a class, they was talking about cryptocurrency. It was talking about one of those cryptocurrencies was going to go to, I think, $5. And then so I just did the math. The number of coins available times $5. I said, if this coin goes to $5 per coin, that means it's 20 times is worth 20 times more than Bitcoin is today.
Yeah.
It didn't make sense. If
Yeah.
Bitcoin is the standard bearer, how are you going to be 5 times worth more than what Bitcoin is? But
Right.
again, they don't do the research. They don't understand. Most people look at a stock price and say if it's cheap or if it's expensive, buy the sticker price, buy the price per share. They
Right.
don't go into the terminals and see that this company could be producing $5 per share. So the actual $135 stock price is actually cheap on evaluation basis based on PE ratio, PEG ratio, and sector dominance and things like that. Like right now, Apple right now is trading at a 22 PE when it's usually trading at a 30, 35 PE.
Right.
Based on the history of the stock is actually cheap, but it has a 135 price, the stock price. So they're saying, oh, that's expensive. And people literally invest in that. That's why you see so many new investors want to jump into penny stocks, and think that they're actually doing something because the penny stock is really not producing anything.
Just like Amazon had a stock split recently, 20 for one, or 1 for 20, however you would word that. But I got calls on that of, should I invest in that stock? And I said yes, but not because of the stock price, not the ticket price right now, but because it's down. And I said, if you want to buy Amazon now, it's a good time to buy, but not because it's $100 right now, but because the stock is down. You're buying 1/20th of what the stock would have been 2 days ago, right? I mean,
Right.
the stock is the same stock. You have to look at it, and like you're saying, it's such an easy tool that you can use online to just find that basic information. What is
Yeah.
the supply of shares compared to the market capital? And I mean, if you just do simple math on that, you can find how many shares are outstanding. But no one, as you said, even with that crypto coin, no one looks into that, and it's so obvious. I mean, I even mentioned AT&T to some people, and they're like, "Oh, it's only $20." Yeah, but company's worth over 200 billion. I mean,
And
it
it's paying a sick dividend and things like that. And with your with your Amazon scenario there, it's the reason why people want to buy Amazon now because they think Amazon actually dropped from $2,000 a share down to
exactly.
$100 a share, and
Yeah,
they're like, oh, it's gonna go back to 2,000. They don't realize that 1 for 20 split that it did, that the valuation of the company is the same. It's just 20 times more shares on the market.
right,
So
exactly.
that's what doing the research and understand what's going on. You can't just look at a stock, see the price, and be like, okay, yeah, I'm gonna buy it, and don't pay attention to it again. But most people just want to take the shortcut to life and think that's how people got successful. Because the only thing they see on TV is, I'll just keep using LeBron James, not to name drop or nothing like that. Just somebody that's famous, very wealthy, but somebody that actually put in the work, like the Kobe Bryants of the world. They put in the work, but nobody's seen them put in the work. So they just think, oh, they just wake up every day and I'm LeBron James, I'm Kobe Bryant, and people just hand me money. They don't think about in the off season all the production meetings he's going to. During the season, he's still having to deal with phone calls and everything about the businesses, building a team, having employees, all that stuff. He has to do the work and research how that works because everybody knows the story about athletes getting their money taken from them by because they don't have financial literacy or by their agents and things like that. So he has to do the work to know all this stuff to make sure his team is running efficiently. He don't know have to know everything that's going on, but he better know where the capital is going because he is the capital.
Yeah.
And that's how he's been able to build a massive network, the first billionaire active athlete that was still playing at the time. That's how he was able to do it, by putting in work, long hours, burning the midnight oil, burning the candle at both ends. All those sayings that the old people use for somebody that do hard work, that's what he's doing. And that's how they get there. That's how successful people, no matter if they're athletes, no matter if they're investors, no matter if they're just a small business owner that just kept growing their business out for a long time, they was putting in the work when nobody else was watching. And I mean, you saw it in the class. I was talking about when I'm looking at real estate, and then you saw my wife jump in the class, like, yeah, he's always on, he wake up in the middle of the night looking at real estate and stuff like that.
Yeah.
That's really what I'm doing. I don't sit around and just like people call me and ask me about sports. I used to be a big sports head, but when I start getting into investing, I don't watch sports. People are like, hey, did you see the game? What game? I don't even know what game's on. So it's just my priority is me. Do I rather look at somebody who's already made it or use that time instead of looking at them and make it myself?
Right.
And again, like I said, most people they go to their job, do their 9 to 5, or 12-hour shifts, and they only look at entertainment when they get off work because they just want to divorce themselves from the crappy lifestyle that they're living. They don't want to do nothing about it, but the entertainment to make them forget about the life that they're actually living. So it's easier just to do that than to actually keep putting your brain to work. And we talked to people about that, and then they were like, "Yeah, that's what I do. I look at entertainment. I ain't trying to learn nothing." So that's how it
Yeah.
goes.
No, no, it's funny that you said like it. The other thing is, you have to really be willing to make all those sacrifices. And there's always going to be a lot of excuses. Probably the biggest one I hear is like when you mentioned your wife, it may like I know your wife is completely supportive, but a lot of people that I would say their spouse is their biggest holdback and their biggest excuse as to, oh no, I can't do that. My wife wouldn't let me spend that money, or my husband wouldn't let me do this or that. But like what you said with like your wife about you being up all night on real estate, like I know like sometimes I'll go ahead and I'll double check my strategy for the following week. Over the weekend, my wife would be like, stock market's closed on the weekends, what are you doing right now? But it's just like, but she's also understanding. And even like when I was going through learning everything with you, just you calling me at night, running through strategies 2 3 o'clock in the morning, and just taking the calls, and having my wife was supportive of that, of saying, go ahead, take the call. And just, you have to be willing to sacrifice those things, time. As hard as, I mean, I think even Kevin O'Leary talks on this. Be willing to sacrifice time from family. You're not going to be at your kids' soccer games, you're not going to be at the birthday parties, but if you want to be successful and to leave a legacy or something for your family, those are the sacrifices that have to come. Someone has to do it in your family. And if you want that person to be you, then you have to be all willing to do so.
And the second part, because people, like I said, they always want to know. Research is the number one thing. The number one thing is research, 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 research. Again, knowing return on investments, knowing what return on investment is good for you. No matter if it's real estate, stocks, if it's dividends, what is your minimum return on investment? All that stuff. Learning cash flow models, all that stuff is important, very important. But one secret that a lot of people don't talk about, and especially in the real estate and in the stock game, is the ability to look around the corner. And what I mean by the ability to look around the corner is the ability to look into the future and see what the future is instead of seeing what's going on absolutely right now. That ability to look around the corner. Like I was telling you, a prime example, when people ask me, why am I invested in a certain area as far as real estate? And I'm looking at where is the migration of people going, especially if rents get too high in one location. Where is the next place that these people will migrate to and still have access to that location? And so I'm looking at those different areas to start trying to accumulate property. And then when the migration starts, I'm already established in that area. And then they're used to paying super high rents at the area they're at. So for me to raise the rental rates where they're going, it's still cheaper from where they came from, but higher than the area that it's in, and then I can continue to build upon that, getting the outstanding ROI, getting outstanding cap rate, and things like that to further the business along. It's just about looking around the corner. That's the key. You always got to be thinking ahead. Just like the stock market. The stock market is not paying attention on what's happening today. The stock market is looking 3, 6, 9, 12 months in the future. That's why the stock market is already down 20%, and it started going down January 2nd, 2022, and the economy was still just vibrant. Nobody was talking about inflation and all that, because the markets already saw the inflation, so it started going down beforehand. If you look at the March 2009, the market bottomed in March 2009 and started going up when the real economy was still down and sideways from 2009 all the way to 2014. It
Right.
didn't have no upward movement. It was either flat or down for that next 5 or 6 years, but the stock market already took up. And that's because they're looking into the future. So they always got to be looking around the corner, know what's coming next, so you can prepare yourself. So just like in the stock market, when the stock market is down, you're looking at what's the next innovative product that's going to come online, and or this stock is very undervalued based on its historical averages, based on once you're doing the research and the numbers saying this stock is very undervalued, so I'm gonna get in now instead of trying to chase it when it starts taking off and going up. And those are just the different things you got to look around the corner. Even buying businesses, if you're looking and saying, oh, especially during COVID, a lot of and we had this conversation because a lot of nail salons and stuff was closed down because
Right.
some of these businesses are highly leveraged and they can't sit there and go weeks and months without revenue coming in. So they were selling their businesses on a cheap. And I talked to you about it was a couple businesses, especially one in out there Clearwater somewhere, and I was very interested in it because I was looking on the flip side of this. All right, everybody's in the house now, but when everybody get out the house, they're going to catch up on that whole 12, 16 months that they were stuck in the house. They're going to catch up at a fast pace. And if you go anywhere in Florida now, nail shops full, the salons full, everything is full but if you took advantage of that depressed time during COVID when these businesses were struggling and got them out of their situation at a very deep discounted price, you're sitting there swimming in the money now because your shop is always full. It's full from open to close, and everything is more vibrant. And even if a recession do come, it's not like it's going back to COVID zero. And
Right.
the prices you paid for these businesses was COVID zero prices. So your revenue might come down a little bit from these peak times now, but based on the price that you bought it at, which was no revenue at all, you're still in a very good spot. So that's really when it going saying doing the work. You got to do those two things. You got to research, and then look around the corner to see what's coming up next. Not current day situation, what's coming up next.
Yeah, and I think it like you're saying, it's very important to look ahead. Like one of the funniest things is hearing people ask me, like, "Oh, how are you still making money when the market's going down?" Like, we just hedge the market. You just do the inverse of it. And so, and doing that with options, it's great because the market doesn't just go from like top to bear market. It gradually gets to that point. And so, as you see a downturn and the market's looking ahead and you're looking ahead and doing your due diligence and putting in the work, you're going into a downturn market and you can take advantage of being aggressive with hedging stocks and making cash from that. And then when it does start to reach its bottom, then start buying up all the good company stocks at a low and taking, yielding the profits as it comes back up. But there's always a way if you're just thinking ahead. Always.
Absolutely, absolutely. But yeah, but that's what I really wanted to get into. Just letting people know online for stocks, Yahoo Finance is a good resource. CNBC is a good resource. When it comes to real estate, just looking up properties, I mean, some of the listings may have what the rental rate is or whatever, or getting with the real estate agent in your area. They have access to the MLS. find out what the rents, the age of the roof, the age of the, hot water heater, furnace, all that stuff is. So potential repair, those are potential investments, not repairs. Those things are potential investments you might have to do in the future with the property. Find out the financing and all that stuff. YouTube is a good resource if you just want to know how to do the formulations, looking at the formulations, finding out what the 1% rule in real estate is. And that's simply, if you're receiving 1% of the rent of the purchase price of the house, it's usually a good deal. Unless it's in a war zone, then no, it's not a good deal. If it's drive-bys going on in your neighborhood, it's never a good deal for your money. But besides that, just learning about the 1% rule, learning about ROI, knowing what is a good ROI for you and your family. I mean, it's different strokes for different folks. For usually the small time mom and pop investor, the number is higher. Before these big institutions and hedge funds is out here buying up all this rental property, their number is way lower. That's why they can pay a higher price for property. And then the key is, again, doing the work. I mean, continue to do the work. Don't just look at the MLS one time and say, oh, I don't see nothing. That's it. New properties are coming on and off the market all the time. You see houses go under contract, and then they stop being on contract because a buyer's financing fell through. The seller, something was wrong with the property. But you have time to do all that, but you have to keep looking, because every 5 minutes there's a new property on the market. Maybe not in your area, but at the areas that you're looking at, it's always something coming up, and you got to do the homework. And I remember when I first met you, I tell you, I don't celebrate the holidays or whatever. And everybody look at me like, is it a religious reason? No, because I know that's when most people are not paying attention.
Yeah, like the deal you got on what was it, Christmas Day, where you actually closed the deal and the agent said someone else was going to buy this property, but he's on Christmas vacation with his family. I mean,
I mean, just this last one that I just did last week, this was Father's Day and Juneteenth or whatever it was. Yeah, because people are so consumed with the holidays. I have to work harder than everybody else. I know. So when the holidays come, I'm working extra hard. I'm looking. I usually find my best deal during holiday time, especially around that Christmas time, that Thanksgiving time, when everybody's hugged up. I'm finding deals. But that's because I want to put in the work every day. I'm putting in the work every day, and it's just those times give me the most benefit, because it's a good deal. And when I run the numbers, I know it's a good deal for somebody else, but they just weren't paying attention because they was consumed with something else.
Yeah.
And that's my time. I'm always looking for, distressed sellers, or motivated sellers, as they call them in the market, and looking for people that's looking to unload inventory. And if you unload it at a decent price, or I can get you to a decent price that meet my financial matrix, then I'm all over it. But you got to be out there looking to find it. Nobody's going to knock on my door and say, hey, I got this property for you.
Yeah.
I mean, you can send out mailers or spend all that money sending out mailers, and then people will call you like that. But again, you got to do the work to create the mailers. You got to put in the capital to have a company mail out those mailers. And you have to be prepared to be able to answer your phone 24/7, because you send out mailers and people will call at different times when they read that mailer. So be prepared to lose sleep when people calling you trying to sell you their property, if you go do that. But that's all this time that's going to take away, like you said earlier, going to take away from the soccer games, going to take away from different things. Like when I'm at my son's MMA practice and things like that, I get phone calls. I got to step out. I'm still looking at it through the window and talking on the phone, but I got to do it to keep building what I'm trying to build.
Right.
Those are the sacrifices that go along with it. If you want success, be prepared to sacrifice. If you don't ever want to sacrifice, be prepared to be broke. It's simple as that.